Today's highlights. US capital is on standby to buy up assets with sell-off signals at their peak. ETFs have withdrawn $128 million. Can Bitcoin remain stable? 160 listed companies are being valued based on their Bitcoin holdings. Will this capital game collapse? A single pardon has broken the ban. Can CZ really return to the throne of Binance? Tonight, the entire market is waiting for one number. With the US government still shut down, all other economic data is on hold, making the September US CPI the only report card the Federal Reserve can look at. Although inflation may still be quite stubborn, the market just can't be bothered to care anymore. Everyone is waiting for rate cuts. The founding partner of capital even openly said that the Fed now cares more about employment and probably won't be scared by this CPI. This year, there might even be 2 rate cuts, one in October and another in December. Inflation hasn't come down, but rates are set to drop. This kind of plot, Hollywood wouldn't even dare to write it. And looking at the crypto world, Bitcoin is unbelievably stable. As for the price, it's back to $110,400, and the Coinbase Premium Index is still holding at plus 0.034. This shows that money from the US is still quietly buying in. Simply put, the price of Bitcoin on Coinbase is higher than on Binance, which means US capital is scrambling to buy. What's even more interesting is that since September, even though Bitcoin has been dumped several times, this premium has barely dropped below zero. This indicates that institutions and wealthy individuals are still taking advantage of the dips to accumulate more. Looking further, the on-chain stablecoin reserves are rising, and ESR is at a low level, so there's definitely enough purchasing power. Right now, US capital is steadily buying, and the price is holding steady. The overall market sentiment feels like a compressed spring. The more it's pressed, the tighter it gets. Once ETF funds become active again, don't be surprised if Bitcoin shoots straight up. On-chain data shows that short-term Bitcoin holders can't hold on any longer. The STR SORP has dropped to 0.992, hitting a new low since April. To translate, this group of short-term holders who have held coins for less than 155 days are starting to panic sell and run. On average, they're losing just 0.8% and already getting anxious. Now they can't even hold the 1.0 level. This shows that as soon as there's a rebound, everyone just wants to break even and get out. In the short term, Bitcoin might fluctuate back and forth between $105,000 and $110,000, just like a kid who doesn't want to go to school, completely unmoved. But don't forget, history has taught us something. Every time there's this kind of short-term capitulation, it's actually when the bottom is slowly being built. When the CPI climbs back above 1.0, it means the panic sellers are all gone and confidence is returning. Simply put, what's happening now is a reshuffling, not a crash. The weak hands have left, and now it's time for the strong hands to shine. Look at this data. Ethereum spot ETFs saw another outflow yesterday, with a net outflow of $128 million. Fidelity moved the fastest, dumping over $77 million. BlackRock also pulled out more than $23 million. That sounds pretty scary, but don't forget, the total holdings are still $26 billion. That's 5.6% of Ethereum's total market cap, so basically, the core positions haven't moved at all. Right now, the ETF is around $3,880, while the actual price is about $2,318, which means on average, everyone is still up by 67%. So don't be scared by this bit of outflow. This isn't a retreat. It's just the market taking a breather, shedding some froth, and moving forward. As long as the ETF stays above $2,300, the bulls are still sitting comfortably. After all, true experts don't go for revenge trades every day. Instead, they make steady profits amid the volatility. Please like and follow for the latest updates from the crypto, blockchain, and mining worlds available 24/7. Click the little bell to join the channel and become a member. Get your member wealth codes from Monday to Friday. The rise of Bitcoin companies is, to put it plainly, a legendary story. Their strategies have inspired people around the world to copy their moves and charge ahead, and their textbook-level maneuvers are simply brilliant. First, they hyped up the stock price, then raised more funds, and finally went all in on Bitcoin. No matter what, they refused to sell, stubbornly turning a software company into a shadow stock of the crypto world. Seeing how easy it was to make money, companies around the globe started copying the playbook. But now, the market isn't buying it anymore. There's only one question. What makes you worth more than your actual assets? So the game has leveled up. Just talking about belief isn't enough anymore. You need real skills. Either you know how to manage assets, or you have the ability to generate cash flow. In the next round, the market will quickly reveal who the real steady players are and who will be washed out.
As of now, more than 160 publicly listed companies worldwide have included Bitcoin in their core reserve strategies, collectively holding nearly 1 million coins, which accounts for about 4% of the total circulating supply. The valuation logic for these companies has completely shifted from traditional profit and cash flow models. Now, the market is more concerned with their Bitcoin holdings per share.
Think about it. The vast majority of capital flowing into this space is going into Bitcoin. In just the past 6 months, we've gone from about 60 companies holding Bitcoin to 160. So I'm laser focused on Bitcoin. I believe Bitcoin is digital capital.
It's worth noting that the market value of most companies is significantly higher than their net assets. This premium phenomenon, as measured by M&A, is generally more than double their net asset value. Bitcoin is becoming a new value measurement system in the capital markets, driving the gradual replacement of traditional financial valuation methods by on-chain asset logic.
These days, just hoarding coins isn't enough. Everyone is starting to think about how to make their Bitcoin generate more value on its own. Some are optimizing their capital structure, while others are figuring out how to earn more coins without diluting the amount of Bitcoin per share. There are even those who are branching out into new businesses, directly connecting with the entire crypto ecosystem. This is leading to industry differentiation. Some companies are evolving toward becoming on-chain banks, digital asset management giants, or exchanges, while another group, those who only know how to hold their positions, will soon be forgotten by the market. The script has changed and the game has been upgraded. Now, it's not about whether you're buying or not, it's about whether you can make your Bitcoin work for you and keep your company thriving. Here comes another bombshell from the ever-straightforward source. On October 22nd, he personally signed a presidential pardon for Binance founder Mr. Zhao Changpeng. This matter only came to light today. The White House quickly confirmed it, with the spokesperson making it clear in one sentence. The president exercised his special authority and officially pardoned Mr. Zhao Changpeng. You have to remember, back in the day, the Biden administration made Zhao Changpeng a prime example in their crackdown on cryptocurrency. Now, with this move from Trump, it's almost like he's declaring the end of that entire crypto war. According to insiders, Trump has been saying a lot lately that Zhao Changpeng and a bunch of other big names in the crypto world were targeted way too harshly back in the day, and he actually felt bad for them. This time, Trump acted quickly, decisively, and precisely. He's clearly backing the entire crypto community.
As soon as the news of Trump's pardon broke, the market reacted swiftly. Binance's BNB surged to $1,142, with a 24-hour increase of 6%, and investor confidence clearly rebounded. While in flight, Zhao Changpeng posted on X to express his gratitude, thanking the president for the pardon and also thanking the United States for its commitment to fairness, innovation, and justice. He also stated that he would dedicate himself to helping the U.S. become a leader in the crypto space and to promoting the global development of Web3.
To put it plainly, a U.S. presidential pardon is essentially America's version of a get-out-of-jail-free card. With it in hand, no law can touch you. For Zhao Changpeng, this is far from just symbolic. In that 2023 settlement agreement, the U.S. Department of Justice had imposed on him. The ban was extremely harsh. It forbade him from ever managing or even touching Binance again. At that time, everyone thought he had completely said goodbye to the empire he had built with his own hands. But now, with Trump playing this presidential pardon card, it's as if all those shackles have been removed. In theory, the ban is gone, the restrictions are lifted, and the path for Zhao Changpeng to return to Binance is wide open. This move makes the story of the king's return no longer just a legend. Miner Chibi AI1egg said, "This is a win-win situation. When stablecoins become on-chain dollars, can traditional finance really just sit back and do nothing? Right now, in the Bitcoin mining world, it's really a case of borrowing money just to survive while desperately burning through cash." As soon as WanMac's latest report came out, the whole industry was in an uproar. Miners' annual debt has skyrocketed from $2.1 billion to $12.7 billion, a five-fold increase. A bunch of small mining operations have gone under, and it's happening faster than anyone expected. Why have they racked up so much debt? Because if you don't keep buying new mining machines, your computing power drops, and the amount of Bitcoin you can mine keeps decreasing. This is what's called the melting ice cube effect. What's even worse is that last year, mining rewards were halved, which instantly doubled the difficulty of making money. Life for miners now is like pulling teeth from a tiger just to survive. Everyone is looking for a new way out. Some are cutting costs through cheaper energy. Others are renting out AI computing power to make money. In short, the entire industry is desperately trying to save itself.
According to Mining Industry magazine, total debt and convertible bonds of 15 listed mining companies in Q4 2024 reached $4.6 billion, dropped to $200 million at the start of this year, then rose to $1.5 billion in Q2, showing financing in mining has accelerated. Companies are shifting from equity to debt, betting on AI and high-performance computing. By securing long-term computing contracts, they lock in cash flow, are less tied to Bitcoin prices, and can reduce capital costs. Firms that once relied on mining are now transforming into computing infrastructure service providers.
The simple story of why Bitcoin and AI are connected is that both technologies require large amounts of energy and electricity, and that's a feature, not a bug. Many Bitcoin miners are sitting on massive reserves of electricity with very cheap long-term contracts at 2 or 3 cents per kilowatt hour.
Recently, Bitforms completed a $588 million convertible bond issuance to fund high-performance computing and AI infrastructure in North America. Terrafy issued $3.2 billion in senior secured bonds to support expanding the Lake Marina data center in New York. Aaron, on the other hand, raised $1 billion to supplement working capital. A wave of financing is sweeping through the entire mining industry. AI and computing power have become the new hard currency, and miners are using capital to reshape their destinies.
Some people worry that if miners all switch to AI, there will be no one left to secure the Bitcoin network. But that's overthinking it. AI's electricity consumption can actually make the whole system more stable. Mining allows surplus electricity in remote areas to be monetized, and it also helps AI data centers share costs. Plus, AI demand has its own peaks and valleys. During the off-season, miners can simply switch back to mining Bitcoin. This way, electricity isn't wasted and fuel costs can be saved as well. VanEck's conclusion is also straightforward. AI and Bitcoin aren't competitors. They're symbiotic. Mining supports AI, and AI supports the mining industry. This is a new era of energy circulation, giving miners a new way to survive beyond just the bear market. A new report from a16z's has sent shockwaves through the entire crypto community. The global crypto market cap has surpassed $4 trillion for the first time. This figure has instantly silenced those who, 3 years ago, were loudly predicting a bubble burst. And now, traditional giants like Visa and BlackRock are all entering the space. PayPal has acquired a stablecoin company, and Stripe has launched on-chain payment integration, boldly pushing for a multi-billion-dollar IPO and knocking openly on Wall Street's door. Even the regulatory climate has completely shifted. After 2 US bills passed, SEC mentions of stablecoins jumped 64%. What was dismissed 3 days ago is now the new darling of finance. In 2025, crypto won't just be lively, it will be the main stage for orderly financial players.
Reports show stablecoin's annual transaction volume is $46 trillion, 3 times Visa. After excluding wash trading, it's $9 trillion, 5 times PayPal. Monthly volume is $1.25 trillion, and total market value is about $300 billion. U.S. Treasury bonds total $150 billion, ranking 17th globally. Centralized exchanges are 1/5 of the global spot market. Perpetual volume up 8-fold. RWA tokenization, $30 billion. DAP's potential is huge. The World Economic Forum predicts it will reach $3.5 trillion by 2028. Philam already has 1.4 million daily active users.
It is the perfect complement to that. Crypto is a great way to provide incentives in the early stages of building a network.
So, what the a16z's report is really telling the world is that the crypto space is no longer a wild frontier. Wallet users keep growing, stablecoins are seeing explosive real traffic, DEXs are replacing centralized exchanges, even AI is starting to work on-chain, and blockchain performance has soared. 5 years ago, it could handle 25 transactions per second. Now it's skyrocketed to 3,400, earning more than $30 billion a year, even more than Solana. Layer 2 fees are so low they're practically nothing, not even a cent. And AI is even crazier. WorldCoin has already verified 17 million people and is even teaching agents to pay for themselves. Now the infrastructure is in place, regulations are set, and the big players are piling in. So the next step isn't just hyping up a bull market, but making it so everyone can live, pay, and earn on-chain. This time, crypto is really shifting from building dreams to building systems. All right, let's take a look at today's major crypto news.
Thailand's deputy finance minister has been exposed for allegedly having ties to a telecom fraud syndicate. He quickly resigned, becoming the first minister to step down since Prime Minister Anutin took office. This move has brought the anti-fraud crackdown right into the cabinet. Meanwhile, SBF's X account stirred things up again, reposting a message. Has he been released? The whole internet exploded instantly. Was it really him posting? Was his account hacked? Or is this just more crypto rumor mongering? And now there's another suspenseful drama. BlackRock's tokenized fund just deposited $500 million in one go on the Polygon network. This move left all the onlookers stunned. Are they increasing their holdings, or is this the start of a new wave of institutional entry? The female investment legend Cathie Wood has made another move. This time, she invested in Quantum Solutions, Japan's first Ethereum treasury company. With a bold move, they swept up 2,365 ETH in one go, instantly becoming the largest Ethereum treasury outside the United States. According to Misery's report, Ethereum attracted $8.7 billion in the third quarter, leaving Bitcoin's $7.5 billion trailing behind. It seems that even Wall Street's wallets are starting to shift their affections, moving from faith in Bitcoin to favoring Ethereum. Even the capital is chasing after the new favorite now.
In this life, the most important skill one should learn is not how to make money, nor how to please others, but rather, no matter how big the obstacles you face, you can always find a way to live contentedly. You didn't choose your background, and luck is unreliable. The only thing you can truly rely on is your own mindset. Don't count on the world to treat you gently. The only one who can truly save you is yourself. Real skill isn't about making a comeback, but about reinventing yourself. If you understand, please give us a like. That's all for today's main content. Our channel covers valuable news in crypto, blockchain, and mining. We provide updates and in-depth reports. If you find us valuable, share and follow. You can also become a member and get our exclusive wealth codes Monday to Friday. Let's get rich together little by little and add a zero to our assets in this bull market. See you tomorrow.